afternoon. This is Chris Brecher with the Simpler Stocks free video for January 24th, 2017. It's about 2 minutes after the close today. I just wanted to get this out pretty quick. Today was all about the market just still forming some kind of bearish wedges or a bull flag, and we can't tell until we see some of the major indexes break one way or the other first. So by the end of the day, we have the ES is down 450. NASDAQ led by the FANG stocks up 425 in here. You have the Russell down 5. You have the bonds up 1 in here. Typical activity we've been seeing where you get the dollar down. So people are thinking that we're having weak economic activity. And so because of that, we get this growth index, the Russell, down. We have the bonds up. And you get a flight to quality of like the gold up because of a weak dollar. And that's what we saw again today. Plus, work the other way also is a lot of economically sensitive stocks not in the Russell. Like the Caterpillars, the U.S. Steels, they were also down today. So it seems like the dollar is sort of the tell in here. So by the end of the day, bonds up 106. Notes up 19, which is actually a lot in there. Interesting in there. You had the NDX up just fractionally. Transports, here we go again. Weak dollar. What are the two indexes that get spooked the most on a weak dollar? The Russell, like I said, and the transports down 86 in here today. You had silver also up 16. Advanced decline. That was a wonderful tell on how you knew the market wasn't going to fall apart today, because the advanced decline all day underlined strength meant that we weren't going to have some kind of crash, even though everybody in the Twitter sphere thought we would. You had the VIX just up fractionally. The VIX futures actually down. And the UVXY, one of the worst products ever made in the world, down 47. Nikkei down 250. Interesting in there. We're going to go over it a little later on the Nikkei and the DJ Dow, the DJ China. If I see some of these world indexes starting to turn over, that could be a big tell for a lot of new U.S. indexes. We haven't seen it yet, but it's something I'm watching very carefully in there. So where overall are we in the market? You're going to see the dilemma if you're like me that day in and day out wants to try to stick his neck out. Basically, you get this kind of wedge formation in here. On the other hand, when you really look at it, you got to be careful that this isn't a bull flag. So how are you going to be able to tell? How on earth are you going to tell? Well, number one, if you have a bear wedge after this massive move from the election, does it really matter if you miss the first 20 points of the ES move? Absolutely not. Last year until January of 2016, you had this massive move down. You have to wait until you turn. That's number one. The only way that I care about anticipating is if I see other indexes already falling apart. Doesn't mean I have to short the ES, but it sure as heck means I'm going to look a lot more for short ideas than long ideas. The problem is, as you see, the ESs haven't broken. The NASDAQ sure hasn't broken, even though this also might be some kind of rising wedge. Russell, that's a different situation. As you can see, it's slowly dying to the downside here. Now, all you need is one big day and everybody's going to think that's a bull flag again. So I cannot tell. But those are the type of tells that I'm looking for in here. The other way I do it in here is I go to Finviz. And I think Finviz is one of my favorite sites. Number one, because it's free. Number two, because I don't even have to log in for all the information, so nobody gets my email address or whatever. Way I look at this, go into futures. And when you go, I love all these colors. Reminds me of college for some reason. You go into charts in here, and what you're going to notice, Dow Jones Industrial, can't tell, S&P, NASDAQ, Russell, Nikkei, Euro stocks, and the DAX. What is the moral of the story? As you can see, none of these have completely fallen apart and invalidated any bullish tendencies. Even the famous Nikkei up here, because the Japanese are always buying their index futures, the BOJ, you can't be sure that's not a bull flag. The idea is if you start seeing one after another falling apart in here, The problem is you're probably going to see the Dow Jones Industrials and the S&P 500 fall as well. On the other hand, if you see these explode up, then you know what could happen also on the way up. So the key for me is to find the break. If the break happens, then you jump on a short. Stocks that you've already seen are exhibiting some weakness already. On the other hand, you want to look for some strong stocks just in case we break out to the upside. So in Simpler Stocks today, in our email alerts, which I come with your $7 subscription, I actually showed stock trades and chart ideas. Guess what? I showed short ideas and I showed long ideas. So just keep that in mind, that I try to show both sides of the equation, not trying to be like anybody like Dan Nathan or Doug Cass that are always bearish and then said, no, they're not. And it's like, I've been watching them for years. They're always bearish. Now, there is a time when they're going to be right, but how about in between? How about making money into that? So just to let you know, like I mentioned, your $7 trial gets you the email alerts. It also gets you the premium video, which is a lot more in depth than what you're hearing now. The chat room where I'm on from 9 to 10 in the morning. A forum, which is a message board way to communicate with me and other subscribers. And a meetup, which I'm very excited about, where almost every other week I do a training class. Right now I'm doing a web series of these classes. Everyone is free. We did a wiggle strategy, not a twerking strategy, using correlation techniques. And next week is the power of pre-market activity. I love doing this kind of stuff, just to let you know. And the idea about these all is, number one, like I said, they come with your subscription. Number two, they go in an on-demand class, and we have a big old database that we've been expanding. And like I said, a lot of other places charge $99 a pop. These all come with your subscription. Correlation, wiggle, creating your own scans. Look how many we have in here. I mean, really, that's tremendous. I mean, every one of these we could be charging for. As long as you're a subscriber, you get them for free. So I hope everybody's enjoyed this video. It was a pleasure to talk to you today, and I look forward to talking to you tomorrow. Have a great night.